Paramount Global has taken a nosedive of over 20% so far year to date in 2024. Near as I can tell, the largest driver of this drop in share price has been the fact that Warren Buffett's Berkshire Hathaway has offloaded a significant portion of its holdings in Paramount Global. I personally still hold my full position in Paramount Global and am considering adding more. Just because I have Paramount doesn't necessarily mean it's right for you, but let's discuss what this means for the stock. First, suffice it to say that there's been a lot of news flying around the last few weeks about Paramount stock. For example, the fact that there was a purchase offer tendered unsolicited by Brian Allen, and the fact now, more recently, upon the release of the 13F from Berkshire, that they sold out. Berkshire sold around 30% of the shares that they held in Paramount in Q4 and dropped their stake down to 63.3 million shares, worth about $936 million. Now, while they didn't completely offload it, it's possible that they may yet offload more of the position. They were deeply red. Their cost basis was roughly $30, somewhere in that range per share. And during the time they sold, I think the average ended up somewhere in the mid-teens. I'm sure that this caused a panic amongst any Berkshire copycats that clone the buys of Berkshire Hathaway. And since they're anticipating an exit, perhaps they jumped ship just to get ahead of the game. And that outflow is driving down the share price pretty substantially. But I'm sitting here asking myself, has anything really fundamentally changed about the company? Berkshire took about a 50% hit on the shares they sold, rough estimate, and my cost basis is a lot lower. My sense for the valuation of Paramount has always been, I probably want to be in under $20, and I am substantially under $20 on my cost basis. And the buyout offer from Byron Allen is over $21 per share. While I don't think that that deal will close, I do think that such a bid does validate my valuation as being about appropriate. Berkshire may have overpaid on this one. However, I still think the reasons they thought there was value are similar to my own. This is a classic example of valuation and the price you pay mattering quite a lot in your investment success. And Berkshire, talented as they are, won't always get it 100% right. It's also important to note that at the time they sold, they may not have been aware that there was going to be an offer submitted by Byron Allen for over $21 per share. Now, I do think that that would disappoint them, but perhaps they would have held off selling at such a steep loss when his offer would have been less of a hit. Barring a buyout, analysts expect 2024 EPS to be $1.16 per share, almost doubling by 2026 and continuing to grow in 2027. They don't really go out further than that, as the further you go into the future, the harder it gets to be to predict with any sort of accuracy. But if we assume that at least the 2024 numbers are correct, I think we can make some reasonable assumptions about the future and come up with something like a value. So this, in a nutshell, is why I still think below 20 is probably pretty good for this. So we've applied a 12.5% discount rate, assumed this year's estimate EPS will come to fruition, given them credit for tangible book value. Now, I actually think their assets are probably worth considerably more than just what the tangible book value says. I think that's a lot of the hidden value in this company. But you can't really, it's difficult to calculate that. So there's not really a place for me to put that into a calculator, and that would be more of a feeling than a thought. But it is something I'm taking mental note of. Also, the 7.5% growth rate, well, think about it like this. We're really actually most likely going to be front loading that in the next couple years. And this may end up being actually too conservative on the growth because of how hard it's going to be front loaded, especially if they figure out Paramount Plus. If they get profitable on streaming and have that reliable stream of cash flow going forward, I think all bets are off as far as their ability to return shareholder value. That's especially true for anyone who buys in at these, what I consider quite low prices. Though I am using conservative estimates in my calculations of the value because I do want an outsized return. And I do see that there are some risks. There's execution risks, and things may not go quite as the analysts or as management suspects. And I have to factor that in and give myself a lot of juice. But I do think this stock gives me multiple ways to win. Either a bid for a buyout gets accepted, and this is nearly always at a premium to current share price, or this future stream of income starts to come back in and they can drive value with dividends, buybacks, etc. Be sure to drop your thoughts down below, what you think of Paramount at these prices. If you enjoy following videos like this, make sure you subscribe to the channel, like it for the algorithm, hit that notification bell, and watch all the videos when they are released. Also, make sure you follow me on X or Twitter, whatever you want to call it. I'm trying to get my first 100 followers. I have over 100 of you in the Discord, so the fact I don't have 100 followers on X is kind of silly. Also, catch me every Saturday, 8 p.m., Cashflow Kings Live YouTube channel. Check you later.